It was another record-setting day on Wall Street as we saw markets drift a bit higher here. S&P 500 closed just fractionally higher, but it was enough for another all-time high. Dow Jones was effectively flat and touched an intraday all-time high, and the Nasdaq Composite was actually today's leader. We were up about 0.5% on the Nasdaq Composite, and that also was an all-time high. So really it was only the Russell 2000 that was left out of the party here today. So another kind of status quo day where we've seen stocks drifting higher and positively responding to earnings announcements and corporate news and the like. So we'll take a look at all that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a neutral trade on a stock that's been mostly coasting sideways recently. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 21st, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below in our description area to sign up for our email distribution list. We're also heavy users of Twitter. I'd encourage you to follow me if you're not doing so already. My handle is @BrandonVanZ, and we appreciate those of you that click like and retweet to help support this project. Last but not least, we also have a presence on Facebook. Feel free to go over to the web address you see embedded in the logo in front of you. All right, let's go ahead and jump into our charts here today. And as you can see, I've got chart 4B pulled up here in front of us. A reminder that this is just a typical 4 grid, so that way we can look at the 4 major U.S. equity indices here side by side by side. Real quick as well, got a question about this earlier, but most of you premium members saw that we updated our entire chart set here over the last weekend. It was a big Martin Luther King Jr. Day project for me, but most of you saw it. If you didn't, sometimes people don't read their emails, so sometimes they catch these videos instead. So just be aware, all these charts will say either January 16th or January 15th in these different charts that we use here. And remember, there's about 52 charts if I'm counting correctly. So those of you that are premium members, that is an excellent resource and opportunity for you to kind of follow along with David and I during our various presentations there. If you're not a premium member and you want to become one, make sure you go over to our pricing table on our website. But anyway, with today's trading, you can see here that we continue to have bullish postures across the board. I mentioned in the intro that the Nasdaq Composite was today's leader. We were up 0.55% there today, and as you can see, that did touch a new all-time high, and we did touch a new high here in the S&P 500 and the Dow Jones as well. It's just that it didn't really make too many waves there. Dow Jones was actually down 0.04% at the end of the day, and the S&P 500 was up 0.03% at the end of the day. So let's call those two flat. Let's call the Nasdaq Composite a fairly decent performance, and the Russell 2000 was the clear laggard here today. Now remember, Russell 2000 just hit an all-time high yesterday, so I took a little bit of a breather, and remember, we had plenty of days in the last couple of months where the Russell 2000 was up significantly more than the others. So today's a little bit of a give-back day from that perspective. Now keep in mind that when you have these types of days that are embedded within a longer trend that's already been established, you have the potential for what's known as a bullish intermediate confirmation signal, and that is what we received here on the Russell 2000 here today. Remember, in order to have that signal, what you're looking for is the green line on the market forecast technical indicator that is considered bullish, ideally strongly bullish. And remember, it can be strongly bullish by just simply being in the upper reversal zone like it is right now, or like back here at the beginning of November, traveling higher between 50 and 80. So that's the strongly bullish posture. The red line has to be in the lower reversal zone on that day for that particular signal, and that is what we received here today. You can see the red line is down here at around 5. And that brings up another point. While this technically is a bullish intermediate confirmation signal, it's not one that we would deem of the ideal nature. And what I mean by that is there's a couple of different ways to size that particular signal up a little bit better. One of them is to use the blue line and see if the blue line is somewhere between 20 and 50. Right now it's at 57, so we're not quite in that zone. And then in addition to that, we generally would like to see the red line somewhere between 5 and 20. So again, remember the red line has to be in the lower reversal zone, but sometimes if it goes too low, it gives us the impression that there might be a little bit of a change under the current that we need to be aware of. It doesn't always work out that way, just something that we want to, lodge in the back of our mind as a possibility. So anyway, we do have that set up for those of you that have been waiting for a little bit of a pullback. You got one today. It wasn't much of one, but it was 0.89% here today on that Russell 2000 small cap index. Otherwise, as you can see from the main posture setting mechanism that we use in these videos, which is to look at the intermediate term line, according to the market forecast, we have strongly bullish postures on all 4 of these indices. And remember, that's been the case since basically early November on all 4 of these as well. So for those of you that have been kind of abiding by that philosophy that we use in this particular presentation as to what types of trades you should be taking, whether bullish or bearish, this simple mechanism, while it's not perfect, it will take you a long ways. And if you always feel like you're on the wrong side of the trade, then perhaps kind of realigning yourself with something as simple as looking at the posture on the market forecast could be a way to kind of get back on track, so to speak. All right, let's go ahead and take a peek at our next chart setup now. And we'll do the 3 green arrows chart setup, and this will be chart 4D here. So as we're looking at this, you can see that we've got 3 out of the 4 charts right now with the background color of light green. That signifies we have what's known as a 3 green arrows signal. 3 green arrows is just some colorful language that we use for 3 different technical indicators and whether we consider them bullish or not right now. And ideally, we'd like to see all of those technical indicators bullish together at one time. And that is the case for all of our charts except for the Dow Jones Industrial Average. Remember, that was the one that was lagging here today as well, closing fractionally lower. But it was already here a couple of days ago when we received the red arrow on the MACD histogram. And remember, that is designed to kind of show us whether we have a loss of momentum or not. So when we look at this chart up here, you can kind of see that we've kind of flatlined on the Dow Jones. Yeah, we hit a new high today, but it hasn't been by aggressive leaps and bounds the way that we saw kind of like out of the gate here back in November. There, it makes sense. The MACD histogram was rising very rapidly because the market was rising very rapidly. Here, it's just kind of a slow grind higher, and that is kind of going to help us understand that there's been a loss of momentum. The momentum itself hasn't necessarily gone negative. It's just that the positive momentum has slowed down. We remain above rising moving averages in all of these cases, and so the path of least resistance continues to be to the upside unless we start seeing some support breaks here or there. And right now, we just don't see that in the cards. And with our other 3 indices, you can see the green background color, and so that signifies we do have 3 green arrows on those. And there's the green arrow on the MACD histogram for the S&P 500. There it is down below on the NASDAQ Composite. And we've had 3 green arrows on the Russell 2000 for quite a long time at this point, a couple of weeks. So that one might be getting a little bit longer in the tooth there. You can see back here during this run, it had 3 green arrows for, let's say, almost a month. It was November 5th is when we got it, and then we relinquished those 3 green arrows here on December 1st. So that was nearly a month that you were able to maintain that 3 green arrow signal there. In this current run, we started it on January 7th, and it's currently the 21st. So, maybe just a couple of weeks in. So anyway, it's definitely longer than some of these other 3 green arrow runs that we've had along the way, but still not approaching what we saw out of the gate here initially after the Pfizer vaccine news at the 1st of November. So all things considered, we have a reasonably strong trending market. And again, for those of you that want to learn about not only the 3 green arrows, but a couple of additional arrows, including my war score indicator and the market forecast technical indicator, we use all of those different indicators in my Monday top-down trend trading class, where we've had just phenomenal success in recent months. So feel free to join me for that class if you want to kind of tap into that knowledge as well. All right, let's go ahead and now take a look at another chart setup. Let's do our a longer-term chart now. And this will be our chart 4C. This will be our 1040 crossover method chart. And as you can see, we've got nice green background colors on all 4 of our charts right now. I don't want to spend a lot of time on this chart because we don't get a lot of changes on this chart, right? This is a chart that is known for less sensitivity, not more sensitivity. And so, like you guys hear me say occasionally, while I can't tell you what to do, I'm not your advisor, but some folks are in a position where they don't get a chance to trade their assets very frequently. It might be because they have restrictions within their 401k or what have you, where you can only make a few transactions per year. This is a way to kind of think about the markets to try to determine if you're on the right side of the trade or not. In other words, are markets trending bullishly? And if the answer to that is yes, and you think that there is some life to that move, then this is a way to kind of establish your portfolios. And right now, I can say that the bullish trajectory that we've been on has benefited folks who have kind of followed by that philosophy here. And in these cases, we've had green backgrounds dating back to basically early June on the S&P 500, and it's pretty similar for a lot of the others. In fact, the NASDAQ was even earlier than that. This was early May when the NASDAQ crossed over bullishly here. Remember, the orange line is the 10-week moving average, the blue line is the 40-week moving average. So when those two moving averages cross, the background color of the chart will cross to make it easier for our eyes to understand that. So for the NASDAQ, we've been in a bullish mode under this philosophy here since early May, and it has been an absolute rocket ship for those of you that have been riding those technology stocks higher. In fact, technology was one of the strongest, if not the strongest, sector here today. So not a lot to share with you on this chart other than the recognition that we continue to have bullish crossovers across the board. All right, let's take a moment to pop on over to the internet. I always like to get a chance to say thank you to those of you that help support us. You guys heard my plea last time, apparently. We had well over 100 people that clicked like the last time I did the video on Tuesday. 117 of you to be exact. So thank you to the additional 20 or so of you that came out of the woodwork to help support this project and click like for us. Please do that every day, whether it's me or David. It is basically your acknowledgement that you enjoy the videos and you want to see them produced as often as possible because they are done on a volunteer basis. And if we get the sense that we're not getting the support, then we'll find other things to do with our time. But the good news is we enjoy teaching, and while we get the opportunity to teach all day long in our premium classes, this kind of opens us up to a different audience, to the free viewers on YouTube there as well. So it allows us to kind of get the word out about our business to a wider net than we'd be able to otherwise. So again, for those of you that want to see this video continued, I would urge you to click like every single day. That's your vote to continue to do these videos. So thank you for that. Also over here, it's catching my eye that under our popular recent posts area, I did update the most recent monthly dividend increases post that I tend to do. So I did pull that up over here already in a separate tab. That's kind of what that looks like, but it's a table of all the companies that raised their dividends last month and then at what rates did they raise their dividends. So some of you might have caught on Twitter, for instance, here just a moment ago, I was tweeting about Con Ed raising their dividend, and then also Intel raising their dividend. So that's an area of interest to me. So if you're interested in dividend increases, I would encourage you to follow me on Twitter. But even if you're not on Twitter, you can kind of catch the compilation of all of this data on a monthly basis here on our website. And this is one of the resources we offer for free. So even if you're not a plus or premium member of our website, you would still have access to checking out this information right here. And where you'd find that on our website is you can come up here to our blog area and then click on dividend growth investing. So feel free to check that out. And again, if you appreciate me putting all that information together, feel free to click like on Twitter there when I post it as well. Also, real quick, many of you that joined us back in 2018 as our original / beta members, your renewals are coming up here in the middle of this year. And so we're running a renewal discount at this moment in time. Many of you should have received our emails about this. We've emailed you a handful of times already. One update to that is that some folks have been kind of getting confused on this point, that in order to pay for the service, some people think that you can only pay via PayPal, because we do talk about PayPal quite a bit here. The reason we're talking about it is you can get a special deal through PayPal where they don't charge you interest during that time period. And so it just takes up a little bit more real estate there. But I just want to emphasize that you can pay for two different ways. You can use directly your credit card when you are doing that. So if you scroll lower on this page, you'll see those details. Again, that's exclusively for those of you that joined us back in 2018. So you should have received those links from us already. If you haven't done so, feel free to shoot us an email and we can get that over to you. And that way we can get you taken care of for another 3 years. And then last but not least, I taught my question and answer session here earlier today. David taught his portfolio management with ETFs class. So make sure you're taking advantage of that content as well. Some questions I answered in my Q&A class today. We analyzed AEP as a utility stock. We took a look at Phillips 66's business model, looking at their chemicals division. We also took a look at Greenbrier, a stock that's in the railroad freight car business. We also talked about the Leaps trade that I did on Discover Financial. Now, this one was specifically during this video. So remember, those of you that are premium members, if you have questions over the trades that I conduct, even during these market outlook videos, you're welcome to ask me about them in my Q&A session. I have no problem talking about those. I know most of the time the questions kind of revolve around our premium trades that we're doing in my other classes, but in this case, Janet wanted to ask me about a Leaps trade that I did on Discover Financial last year. It was actually on April 14th of 2020, and it ended up being my best trade of the entire year. In that video, if you wanted to go back and watch that market outlook video that particular day, I talked about the possibility of quadrupling your money, and I was mentioning to Janet here today, that is not something I take lightly. In fact, I'm not sure I've ever stated that in my entire life when it comes to a trade setup, but I felt rather confident in that particular situation that day because of all the very interesting fundamentals that were available on Discover Financial, including a 5% dividend yield. It was trading at 4 times earnings. It was trading below book value. And I said, if this thing goes right, you could quadruple your money. And indeed, that's exactly what happened. In fact, we almost quintupled our money on that particular trade. So if you want to hear my discussion, my follow-up on how to manage that trade, feel free to check out my Q&A session today if you're a premium member. I should also retweet that for those of the rest of you that want to kind of, again, get into my insight as to why I was so interested in taking that particular trade on that day. So maybe look for me on Twitter here in the next day or so and I can kind of dig that up. Anyway, Dennis asked me a question about how do I find my trade choices for the market outlook and for factor-based swing trading and options for long-term investors. Chip asked me about our dividend stair-step charts and how we do those calculations. Brandon asked me about how to use the position size calculator in my swing trading class. Linda asked me about selling puts and whether to think about it in terms of return on risk or using deltas to determine which strike we're going to select. And then Rona asked me about end phase as a long-term holding. So lots of great content as always in my question and answer session here today. If you are a premium member and you're interested in any of those topics, make sure you come right on back up here to our Trading Rooms calendar and watch today's recording. All right, let's get back on track in the Thinkorswim platform once again. And let's start doing our 12 grid analysis now. So let's come on over here to our chart 5A. This is our asset class 12 grid. And a reminder that when we're looking at these 12 grids, the background color of the charts will tell us whether the current market forecast intermediate posture is bullish or bearish. So naturally, the pink charts are going to be your bearish charts and the green charts are going to be your bullish charts. And there's a couple of different shadings, with the darker shades being strongly bearish or bullish, and the lighter backgrounds would be weakly bearish or bullish. So as an example, Bitcoin had quite the tumble here today, and while it's still above its rising moving average, notice the background color of the chart has now turned to light pink. So it's still a strongly trending asset class. However, it has kind of fallen out of favor here with today's rollover. And so it does remind me that with that Ethereum trade that I did 1 week ago, remember we placed the trade a week ago and we got out here just a couple of days ago at our price target. Had we not done that, we would have been looking at some losses. So, sometimes doing the swing trade comes with that benefit. Remember, there's always pros and cons to every single trade that you decide to make. In the case of a swing trade, how quickly you get in and out can be a feature rather than a bug. And this is case in point with the Ethereum trade in that case. Like if I were to pull up ETHE, what I used for that particular trade, we got out on this candle right here nearly at the top. It wasn't exactly at the top, but it was like maybe 10 cents away from the top. We got out, and this thing has collapsed the next 2 days, including down 10% today. So because we got out 2 days ago, we don't have to worry about that meltdown right back down. And that's exactly what I told you guys in the video a week ago, that this was not a buy and hold trade. This is to take advantage of the bounce that I was seeing and to get in and out very quickly. Now, I didn't necessarily know it would shake out in this particular fashion, but I did know that it was going to be extremely volatile. So you kind of have to buckle up for those cryptocurrency types of trades. So anyway, I'm glad we were able to get in and out of Ethereum in a very short amount of time, because those cryptocurrencies, including Bitcoin, starting to have a little bit of wear and tear on their charts. Some of these other charts that are kind of catching my eye here, you'll notice that long-term U.S. Treasuries, foreign bonds, and gold all have that dark pink background color as well. And that tells us that we have strongly bearish postures on those securities. Of the three, there's one that I think is kind of unfairly painted with a strongly bearish posture, and that is gold. I look at gold as more of a sideways chart. Yes, it's chop and slop. It doesn't look like a great chart. It's not one that I would necessarily want to be bullish on, but it's not necessarily one I'd want to be bearish on either. It's just kind of a wait and see chart, as I've mentioned to you guys several times in recent weeks. So in that case, I'm not necessarily going to say, oh, well, the strongly bearish posture says I should just take gold off of my radar screen. I think there's still some potential there depending upon how things shake out. We're still in an environment where we could see some pretty decent inflation coming up in the months and years to come with all this money printing that's taking place. Long-term treasuries and foreign bonds, on the other hand, those charts look pretty ugly. And I'm happy about that. Remember, we currently have an open trade on TLT right now, a bearish trade. So the worse it does, the happier we are, because we're going to find success with that particular trade. We don't have any trades on the foreign bond market right now, but if I were to look at that particular market, I think I would probably be looking at it more bearishly at this moment in time. You can see a pretty ugly candle there today on the foreign bond market. You can also see down below in the lower left-hand corner that the US dollar fell today. Now, interestingly enough, a lot of times when we see the US dollar fall, and in this case it was down 0.45%, a lot of times you see a little bit of relative strength in the commodities. We didn't really get that today. Gold was down, albeit fractionally. It was only down 0.06%. And oil was down about the same, 0.08%. But a lot of times here more recently, when we've seen the US dollar go down, we've seen commodities, especially oil, go up. So today was a little bit of a different day from that perspective. We did see the outperformance of the emerging markets yet again, right? And that's another thing that I mentioned in the video on Tuesday. When the dollar rolls over, you usually find a little bit of outperformance in foreign securities. The developed foreign stocks didn't necessarily outperform today, but the emerging foreign stocks did. EEM was up 0.18% today, which did beat the S&P 500 up just 0.09% today. So something to keep your eye on there. That's probably the strongest chart on the board right now, at least of all these charts here in front of us. I mean, that has just been persistently strong for a full 3 months at this point. That entire category of emerging markets up 22% in 3 months, right? And a lot of Chinese stocks there. In fact, our trade application example is going to be a Chinese stock that I'll show you here in just a little bit. Before we get to that, let's go ahead and have a conversation about sector analysis. And for that, we're going to come over here to chart 5C. And when we look at the sector analysis here, you can see that it was a technology stock that I had mentioned earlier. So tech stocks did really well today. XLK, as our proxy here, was up 1.29%. Now, I mentioned this on Tuesday, but I got another email about it last night, and I said, hey, I mentioned it in the video on Tuesday. I'm not sure if you heard it there or if you just misheard me or what, but just so we're clear, while I got your attention, be aware that chart 5R, the old chart 5R, used to be the equal weight 12 grid. I have changed that to chart 1G. So somebody had emailed me the other day and said, why didn't you update chart 5R? I said, I updated it. It's just that you didn't. You just need to delete it off of your platform. I wanted to move that particular chart over here into the ones category, where I teach my top-down trend trading class, where we do have that sector analysis. So we're leaving kind of the market cap oriented 12 grid here for sectors in the 5 category that we use more often for the market forecast, or the market outlook videos, I should say. And then the equal weight sector 12 grid is now located in the 1 category that we would use in my top-down trend trading class. So just to clarify that point, just in case that wasn't obvious to all of you there. Anyway, when we're looking at this one, remember these particular sectors are the ones that are the more popular ones. These are the big market cap weighted ones that are pushed around a bit more by Apple and Amazon and Tesla and the like. So technology often running to the upside. You can see a new high in this case, and it was a beautiful bounce up and off of that 30-day moving average. Also impressive was communications. Now remember, 2 days ago when I was with you, I said there's a very good chance that on Wednesday, so that would have been yesterday, that communications could break out. And the reason for that is we already had the knowledge after hours when I was doing the video that Netflix was surging off of their earnings announcement. And I said that was good timing, because otherwise communications might have been looking like it was sitting right at a resistance point there. But Netflix kind of bailed it out, took communications all the way up. We actually broke out above that horizontal resistance area there, and we went up a little bit more here today. So that's all of a sudden becoming a very interesting area, or an interesting sector once again. And if you look at a stock like Google, it has a chart that looks very similar to this, or Alphabet, however you want to say that. In other words, a breakout here in the last couple of days. Now, Google does have their earnings announcement coming up soon, so you got to be on the lookout for that. But there might be individual charts that look somewhat similar to this XLC chart. So I would encourage you to kind of sift through the merchandise there and see if there's something that you want to latch onto. You also saw that discretionary has a pretty nice looking chart here. We were up about 0.5% there on discretionary today. Now on the downside, it was energy, and energy had been a leading area, but as you guys know, energy is a little bit more volatile. It moves in a hurry. And today was one of those move in a hurry to the downside. It's still above its rising moving average, so we don't want to make too much of it, but it was a pretty aggressive day. It was down 3.38%. Now notice exactly where the line ended here today. The intermediate line ended at 79.99. In other words, that is as close to being in the upper reversal zone as you could possibly be without actually being in the upper reversal zone. Remember, if this would have closed at 80.01, then the background color would have stayed dark green. But because it fell just barely below 80, you now have that weekly bearish posture. But that's about the weakest weekly bearish posture you could ever find right there in that case at 79.99. Real quick here on the real-time analysis of our sectors. So I'm going to pull up chart 1E here in this case. Remember, this is our sector selector. Many of you are familiar with it from the Excel form, where I post some screenshots of that to social media on occasion. But our new enhanced updated version of this sector selector for all of you that are premium members will kind of give us one additional benefit here. We can actually see how the rankings are progressing on an intra-week basis. Remember, in the past, I would show you guys what the rankings are each Friday. So it'd always be a Friday over Friday look. This new view, which you guys have access to at your fingertips 24/7 if you're a premium member of Market Scholars, you can actually see that data changing and get a heads up as to how the rankings will look if I start posting some of those screenshots to social media on Friday night. So with it being Thursday, we already have a pretty good idea where some of these areas are going to shake out. And naturally, with energy falling as much as it did today, we shouldn't be surprised to see energy falling from the top slot down here to the number 2 location at this moment in time. And remember, if it falls again tomorrow, maybe it goes down to 3 or 4 by the time the week is up. So we've got one more day to kind of see what's going to come to our attention there. But that's one thing that's pretty interesting. You'll have to keep your eye on it. Anyway, with them moving out of the way, it's now consumer discretionary that's back up at the top slot. The other thing I wanted to point out is look at communications. Communications was down here at number 7, but they have ramped all the way up to number 5 in real time. And that's a big part because of what happened there with Netflix here yesterday, and it just carried the entire communication services division up with it. Okay, so some interesting movements there on an intra-week basis, and of course we'll talk about that once we get back into class on Monday for my top-down trend trading class for those of you that are premium members. All right, let's get into our trade application example here for the day. I'm just going to pull up chart 3A here. This is our swing trading chart. I mentioned before we're going to be looking at a Chinese company, and this is a Chinese company I've actually used. I had the good fortune to travel in China for about 2 weeks. Been over a decade at this point. I think it was back in 2007, I think, way back then. So anyway, I had the good fortune to travel that vast nation for a few weeks, and we actually use this company, Trip.com. It used to be known as C-Trip, and they're kind of like the Priceline or Expedia or something along those lines over in China. So they're a company that is a larger, well-known company over in mainland China, but they actually have some of their main tradable securities here in the United States on the NASDAQ. And in this particular case, I wasn't attracted to the directional nature of the chart. It was the opposite. I thought that this was a chart that looked like it was going absolutely nowhere. And the financial market is an interesting place because I think a lot of new folks assume that in order to make money in the market, you have to know where the stock is going to go. Well, the truth is, sometimes you can make money in the market if you just have a strong hunch as to where you think it won't go. And in this case, when you're doing something like an iron condor, which I've already done, and I've already sent out the details to those of you that are premium members on our Telegram app. Remember, I do the trades a little bit before the market closes, and then I try to send that information out so that way you guys can have access to it before our free audience does on YouTube later in the night. So the trade's already done. And it was an iron condor. I think I used the February contracts, and I think I used the 38 strike as my sold strike on the call side, and I used the 31 strike as my my sold strike on the put side. Now, for those of you that are newer to this term, iron condor, I've placed our break evens on the chart right here after factoring in the credit that we received when we sold the contracts to begin with. And basically, what you want to see happen here in a case like this is sideways activity. You can see right now, Trip.com is basically in line with the S&P 500 over the last 3 months. You can see that the price candles are matching kind of this dotted gold line that you see on my chart here. So these two are basically marching in unison. And while the market has been going higher, we haven't seen big leaps and bounds higher. It's been more of a kind of a slow grind higher, as I'd mentioned before. And so this gives us plenty of opportunity for us to see this stock continue to drift all the way up to 38.25 before I get in trouble, or it could potentially roll over and drift lower to 30.75 or less, and that's where I would get in trouble. But if it stays between 30.75 and 38.25 here in the coming month until the February expiration, then this would be a winning trade. So again, if you want to learn more about that, feel free to check out my Telegram app. But the basic idea behind it is just a neutral chart. Doesn't look like it's going anywhere. They've already reported their earnings, and their next earnings announcement's probably not going to come out until March, early March. And so our February contract should not be affected by any sort of a major gap up or gap down as a result. So anyway, that's what I had for you here today. As always, I appreciate your attention, your participation. Love hearing from you guys in the Q&A session like we did with Janet's question here today. If you do get value out of these free YouTube videos, one thing that we ask out of you is just help support the project. It's pretty easy on your end. We give up a couple of hours of our day on our end, and we think it's worth your while to click like for the 5 seconds that it takes over on Twitter. So please continue to do that on your end. I want to wish you all the best of success with your trades and your investments, and I'll see you all next week. Take care, everybody. Bye-bye.